Hi there, Shingirai here again with an update on global current affairs. Trouble seems to be dealing an equally heavy hand as we head into the first full week of the UK election campaign trail. Many candidates and supporters have had to brave the cold whilst trying to warm up to emotions of rushing through an unplanned election and navigating murky internal party political waters. Whatever the resulting concoction may be, the market will definitely be keenly watching to see if the numbers themselves will be able to sway Parliament towards firming up some version of a deal. Politicians were offered little respite by the UK economy growing by its slowest rate in almost a decade. The economy avoided recession by growing at 1% over year ended 30 September as compared to 1.3% growth at the end of the previous quarter. Market sentiment in the US was broadly positive during the week, and the improvement in investor sentiment was largely due to better than expected soft macro indicators such as the ISM non-manufacturing index, which rose to 54.7 in October. Rising optimism would mean that there will be unlikely any more monetary easing from the Fed, and the probabilities of a rate cut are beginning to steadily fall as predicted into 2020. The S&P 500 last year saw very low levels of volatility, which would be generally accepted to be associated with bullish markets. Asian stocks delivered a mixed performance during the last week. However, the markets will close lower today in the midst of breakouts of violence in Hong Kong protests and the protests for the first time going into a new week. This was further exacerbated by President Trump playing down the possibility of a trade deal in the new future during his remarks all over the weekend. CPI numbers out of China also accelerated to 3.8% year on year, and the Hang Seng closed down about 2.6%, whilst the Shanghai Composite Index would close down about 1.83%.